Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, May 11th, 2020, and we are pre-recording this Trading Places Live for Tuesday, May the 12th. Futures are currently flat, but we do have a long time to go between Monday evening and Tuesday morning, so we'll see what happens tomorrow morning, but wanted to go through and first give you an agenda for this particular show. I'm going to start off with daily market recap, as I usually do. Then we'll get into talking technically. I'm going to show you a few charts on the Spider, the QQQ, the Semiconductor Index, and then maybe a quick look at the VIX. There are a couple of topping signs that we need to be aware of as we go into this week. I think some of the gains might be a little tougher to get this week, although in a secular bull market, who knows? Maybe we just keep running to the upside, but there are some things that we probably should at least consider. After we get through talking technically, I want to go through ChartLists. This is a great feature at StockCharts. I use it all the time. I allow members who are Earnings Beats members and also StockCharts members. We give them links, and they can literally click on the link, type in the password we give them, and they can download the chart list right into their account. And I'll show you some powerful chart lists. These are unbelievable and have been for the last 2 months. And I would not want to try to navigate my way through this market right now without these chart lists, but I'll go over those a little bit later in the show. After we wrap up the chart list, I'll give you the earnings spotlight. There are maybe a handful of companies that came out after the bell on Monday. I thought their earnings were pretty good, so we'll take a look at those. And then we'll wrap up the show with three you must see, three charts that I think are worth noting before you head into the action on Tuesday. All right, before we get into the action, I do want to just mention that if you go over to earningsbeats.com, you can sign up for a free newsletter. I publish this Monday, Wednesdays, and Fridays before the market opens. All you need to do is put in your name and email address, hit subscribe, and boom, you are in, and you will start getting these on Wednesday. We do a lot for our members, though, and one of the things we do is we have frequent webinars. We are having one tomorrow, Tuesday, at 4:30 p.m. Eastern Standard Time. And so if you want to join that webinar, it's on Max Pain with options expiring Friday. There are stocks you really want to be careful with as we head into the end of the week. So we'll be going over those stocks tomorrow with our members. That starts again at 4:30. And if you'd like to be part of that, just simply click on the Join Today button. When you go through, actually, I'll just show you on Join Today. This gives you an idea of what we do at Earnings Beats. And then click on this Join Today. It is a $7 trial, 30-day trial, but you'll be refunded. You'll get a full refund within 5 to 10 business days. So essentially, it's a free trial. StockCharts also has a free trial for 30 days. So consider doing both of them. And then as soon as you go through our service, you'll see that you'll be able to download chart lists right into your account. And they are powerful. Again, I'll get into those in just a few minutes. Let's go through the action on Monday. First, we had the Dow Jones Industrial Average down over 100 points, 109 points to be exact. S&P 500 almost dead even. We gapped lower, but we came up, finished on the break-even line. NASDAQ outperformed as it's been doing throughout most of this pandemic. Did it again on Monday. Rallied more than 0.75%, challenging the 9,200 level. We are now setting a new 2-month high, getting up to almost 9,200. Mid-cap, small caps underperformed again. And when we look at the sector performance here, you can see healthcare, technology, and communication services. These were the only 3 sectors out of 11 that rose on Monday. These also are 3 of the strongest sectors since the pandemic began. So we are continuing to see the same theme play out. You want healthcare, you want technology, and communications services, especially internet. Internet stocks have been doing extremely well, especially on a relative basis. Those areas, though, have been incredibly strong. Not so strong have been financials and energy. And quite honestly, it's very surprising to me that the financials cannot catch a bid, given that the 10-year Treasury yield now has closed above its 20-day moving average for the 3rd day in the last 4 days. Normally, when we see the yields rising, financials rise along with it. That has not been the case of late. We got to be really careful with what's going on here in the financials. Energy, we're trying to get through 40, haven't been able to do it yet. Unlike the NASDAQ, which has been breaking out, energy just can't seem to quite make that push. We've got some overhead gap resistance just above 40 that we're going to need to contend with there as well. And you can see overall the accumulation distribution here just not very strong. Whereas when you look at healthcare, technology, communication services, it's been much stronger. Financials, you can see, seems to be a lot of distribution going on there. Just, you know, that's been kind of the theme in the market, and one that I would continue to watch closely. All right, let's move over to the 10-year Treasury yield. I just wanted to show you here. If we pull this up, you can see that on Monday we had a big day. I mean, we rose up 0.73%. There are your three closes in the last 4 days over the 20-day moving average. That's better than anything we've seen in 2020. And we've only had, it looks like maybe 1 or 2 days where we've closed over the 50-day moving average. That's next up for us. We've got to get through that 0.75 area. If we do that, we will be doing something that we haven't done much of in 2020. And namely, that is closing above that 50-day moving average. If we do that, that's telling us money's rotating out of treasuries, and that could help to send stocks even higher. Any money coming out of the 10-year treasury bond right now, or any of the treasuries for that matter, are seeming to find a way into the stock market, particularly into the NASDAQ market. All right, let's keep moving on. Let's move into talking technically. All right, so I said that there were some things that we want to be a little careful of, and I'm going to point out two things on both the spider and the QQQ chart. First thing with the spider here is that as we've been moving up, trying to challenge the recent high, look at this accumulation distribution. Now, this was one of the things that alerted me to the fact that, hey, we probably were not going to keep going down in the market, because as we initially dropped at the end of February on the S&P, you see this AD line drop? That's telling us that there's some distribution going on. But after we bounced and we came back down way below this prior low, so third week of March, we were well below that low that we saw at the end of February, but accumulation distribution never broke down. So it's somewhat of a positive divergence. And from there, you can see the market actually recovered very nicely. And we've never gone back down below those lows. But after breaking out around the 19th, or I guess this would have been the 17th of April, to a new high, you can see the AD line also moving higher there. It looked great. But on these last two moves to the upside, you can see the AD line is drifting lower. So I'm not sure. This is, maybe suggesting that we're not seeing quite the accumulation now that we were back then, which tells me maybe as we go into options expiration week, we want to be careful. This line right here coming across, this horizontal line, this is an estimate of where max pain resides right now on the spider. So that is around the 288 level. And the way you get this line to print like this is you go down, and on the overlays, you can pull up horizontal line and just type in the amount. So here I put in 288, which is roughly max pain, and you can see this comes across here. So this will be something to watch as we go forward. Another thing to watch is going to be the QQQ. And this group has run a lot further to the upside. And so look at the max pain here on the QQQ down around 208. We finished at 226. So we're talking about the potential. I'm not saying we're going back to 208 this week, but when I look at max pain, I use it as a directional clue. So the QQQ is going up, but it would behoove market makers to begin seeing weaker action as we get further and further throughout the week, maybe even into the early part of next week. And so I think that this is going to be a time to be, a little cautious, as we go into option expiration week. When we went into April here, you can see as we got to about the 20th option expiration, we were fine, but it was Monday and Tuesday the following week we had this big hit. When we're back in March, it would have been, let's see, the 20th, so it would have been right here. And you can see after gapping up the next 2 days, Friday and that Monday, pretty big move. I mean, from a high of 182 on the QQQ down to a low of 165. So you can see that we've had some big drops. Back in February, we were at the high. Week after options expired, came tumbling down. And actually, no, March, I take this back. March, I think we Yeah, we actually bounced into options expiration. This is the week after options expiration, because options expiration was the 20th. So we had been going down. There was a lot of in-the-money puts. And look what happened the week after options expiration. We had this huge rally. So anytime you got the market going in one direction or the other into option expiration week, you've got to be thinking that we're primed for a possible reversal. It's not a guarantee. But if you're long and you've been in a lot of these NASDAQ 100 names, be careful. Check out their options and see if there's a lot of in-the-money calls. And if so, I would definitely have my stops in play, or maybe even buy a put if you're an option trader. Maybe just something as a hedge against your position. But I'd be careful going into option expiration if you've got a lot of profits. All right. Let's see here. I also wanted to mention that the last time we saw the when we rallied at the beginning of March here on the S&P 500, got back up above 3,100. I want you to notice where the VIX was on that rally. The VIX dropped back down right here to 25. So we went up to 50, and just on that 2-day rally, we came back to 25 before we moved all the way up to 90 or in the 80s. And so now we've been working our way down. We're getting close to that 25 level. And you can see at the end of February, we hit 25 and bounced. Also beginning of March. If we get a little bit more strength here, watch the VIX. If that gets down to around 25, start looking maybe for some sort of a reversal on an intraday chart of the major indices or the ETFs that track the major indices. That's what I would be looking for. And then one last thing I wanted to show you was the semiconductor group. Because if you're looking at the semiconductors, you can see we just got up to 4,300 today, 4,303. That's right where we set a high at the end of April, right about that 4,300 level. If we pull it up on an hourly chart, probably can see it even better. See that failure? We got over 4,300, went all the way back down here. We've made that move all the way back up. Are we just going to go through it, or are we going to see some selling? Into the close today, you can see we saw a little bit of selling. So semiconductors, if they move down, if they can't make this breakout above 4,300, that is going to make it more and more difficult for the NASDAQ 100 to keep going higher. So this could present a headwind for the NASDAQ 100 and something I would continue to watch pretty closely. All right, let's keep moving on. I wanted to show you these chart lists, and I tell you, this has been powerful, not just for me personally or for Earnings Beats, for all of our members. All of our members really benefiting from this. Let me just give you a little bit of background here. So if actually, let's go back to the QQQ for a minute. So if you're looking at the QQQ, you see the move down here and then the rally. Well, on the first move down, there was the drop in the AD, but then we rallied back. And when we went back down, we never broke lower on the AD. And in fact, many NASDAQ stocks, actually, as we were moving down, we're seeing movement back to the upside and breaking out on their accumulation distribution. Now, if you understand the way the formula works on the AD line, it simply looks at what's happening in that particular day's candle. So, for instance, if the QQQ finishes on its low of the day, it's going to definitely take a hit on its AD. But even if it finishes lower on the day, if it rallies off its intraday low and gets back above that midpoint of its candle that day, then it will gain ground. And, here's a perfect example right here on March 18th. So right there, let me annotate so you can see which candle I'm talking about. So right here, see this candle, this red, see that red candle body? That means that you're finishing at the upper end or you're finishing above the open. So you're closing above the open, but you're still closing below the prior day's close. So it was a down day, but you were able to finish above the open that day. Well, by finishing back near the top of this candle, more than the 50 midway point of this candle, it is actually a positive. That's where we saw this pop here on the AD. Now, if you looked at OBV, you would actually see a move down by the amount of volume because it just looks at close to close. Doesn't care how low you went during the day and whether you rebounded. It only looks close to close for the OBV. AD line is looking at where you finished today versus your high and low today. And if you're above the midpoint range, then you're going to end up getting positive volume added to your accumulated distribution. And if you're below the 50% range, below that midpoint range, then you go lower. And if you're all the way at the bottom, the multiplier is the volume itself. So if you're all the way down at the bottom, the total amount of volume would be subtracted. If you're all the way at the top, the total amount of volume would be added. So you have a volume multiplier. The OBV doesn't care how much volume you have, and it's not going to apportion it. It's either going to give you all of it to the upside or all of it to the downside, whether you went up, had a 5% day higher in the NASDAQ, or whether you went down 1 penny. The volume, whether it goes up or down, is still going to be based on the fact that you just simply went up or down, which I don't think is a great way to evaluate, especially in this market, what we've been seeing. So with that background, I created 2 chart lists, a strong accumulation distribution chart list and a weak accumulation distribution chart list. Now, in order to be on the strong accumulation distribution, not only do I want a high accumulation distribution, looking good, pointing up, but I also want scooters high. I want to have some of the best relative strength stocks, in addition to having some of the best accumulation distribution stocks. So that is really important, because the combination of relative strength and stocks that are apparently being accumulated, that has been a powerful combination now for the last 2 months. And in today's action, look at all the stocks. I want you to look at all the stocks that are up. There are 372. Let me go to the edit screen here first. There are 372 charts on this list. You can have a max of 500. We have 372 on here, okay? If we go back now to the summary, of the 372, and I've got the number already somewhere over here. Let me get it for you. All right, 56 of them, or 15% of this list, gained more than 5% today. So here's where they're basically, I think they're 26 on a page. So here's 26, and 750 is the last one. So let's put 750 up there. Now I've got 26 more, so there's 52 down to 523. There's 523, so I'll put that up there. And then there's 4 more. That's 56. 56 out of 372 is 15%. If I stretch that down to 3%, those stocks that gained at least 3% today, 306, down to this level, there are a total of 156 of the 372 stocks that gained more than 3% today. That's 28.5% of all the stocks on this chart list gained 3%. Let me show you the weak AD chart list. Now I want you can count these up pretty quickly. Here's over 5%, there are 8. And over 3%, there's just 1 more. So that's 9. There are 268 charts on this list. 9 of them, 3% of this chart list stocks have went up on Monday more than 3%. 3.3% of them. 3 out of 100. 28 out of 100 on the strong AD list. So if you're trying to trade this market on the long side, which do you think is going to work out a little bit better for you? Which one do you think you have better odds? Well, if you look at the stocks that have had very weak accumulation distribution and have very weak scooter scores, you have a very poor chance of making money on the long side. However, if you like to short, check this out. So now, from 3% and 5% levels, I want you to take a look at how many charts are on this list that have gone down 5%, 5% or more, all the way down to right here. That was a lot of stocks I just showed you. Let's take it down to 3%. Let's just keep scrolling, keep scrolling, keep scrolling. Here's 3%. That's where that ends. 62% of the weak AD charts, 62% went down at least 3% today. Let's go back over to the strong AD list. And let's sort by the worst ones. How many of these, probably a bunch of these got hit, right? 5% or more, there were 8 of them. 3% or more, right here, there were 17 of them. 4.5% of the strong AD chart list, 4.5% of the stocks went down more than 3%. 63% of the weak AD went down. I have been saying for weeks and weeks, this is the way you trade this market right now. Stay away from the stocks that are being distributed and stick with the stocks that are being accumulated. It is so clear. And if these chart lists don't show that to you, I don't know what will. And again, go over to Earnings Beat, sign up for, it's basically a free 30-day trial. And if you're a StockCharts member, you can download these chart lists right into your account. It's that simple. You have to be at least an extra member at StockCharts. So make sure you're an extra member. If you're less than an extra member, believe me, it's worth it. Go ahead and scale your membership up to an extra member or pro. All right, one more chart list. This is, we had a webinar on Saturday, and we actually had a couple of really great guests from StockCharts. Grayson Rose and Bill Shelby joined me. And so we went through, we did 6 different segments of about a half hour each. So about 3 hours. It was a free event. And actually, before I even go in, if you haven't checked this out, go to YouTube. And after you get to YouTube, I want you to type in Earnings Beats. Go to earningsbeats.com. Okay, we don't want that. Try this again. All right, and then once you get to Earnings Beats, click on this. And here are videos. When I do my Trading Places live at Earnings Beats on Mondays and Wednesdays, you can always come in here. They get posted usually pretty soon right after the show. But here was the Saturday. This is 3 hours and 29 minutes. You can kind of go through if you'd like, but this was a really important webinar that I thought was awesome. And it's free. You know, already 1,400 views. By the way, when you're in here, hit subscribe. We'd love to have you subscribe to our videos. But yeah, I mean, it was a great 3.5 hour session. You can go through and check these various sessions out. They're actually even time stamped. So you can kind of look at what we're going to be talking about, and you can kind of go in, you know, paradigm shift. Grayson and I talked about stocks poised to gain for 30 minutes, 20 different stocks that we went through that are really doing well right now. Definitely check that out. I talked about creating portfolios to beat the S&P 500, and then down here, trading short squeeze opportunities. So that's what I wanted to show you. One other thing that we offer our members is this short squeeze chart list. These are about 140 of the most heavily shorted stocks in the market. And look at how many of them just busted out today. And most of them have high scooter scores. Now, the ones at the bottom that didn't do so well on this list, for the most part, have low scooter scores. The ones that aren't doing well, stay away from them. You're not going to get a short squeeze out of a stock that's going down. You're going to get a short squeeze out of a stock that's going up. And when you're looking at stocks that are going up, check out the higher scooter scores. These are the ones that were going up today, not the low scooter scores. Down here, the low scooter scores were mostly going lower. You had one good one here, a couple of decent ones, but you see the difference? Short squeezes work when you have strong stocks. That's what forces shorts to cover and send the stock even higher. If you're a little confused or you're not familiar with what this means, go back to that YouTube video I showed you and check it out. That section will explain a lot. All right, earnings. I just want to go over a few earnings reports that came out after the bell on Monday. Really good reports. GWPH, let me give you an update here. It's now trading 8% higher after hours, 118. Stock has been in an uptrend. It's in the pharma space, which has been a strong area of the market. And here we go, another 8% tacked on. How about IIVI? Big report here. The stock up 25% after hours. And you want to look at something, check it. Well, let me do a sharp chart here. I want you to see this accumulation distribution here. See, as the stock was going down, look at the AD rising. It broke out in the middle of March when we were in a breakdown on the price. And look what's happened now. And now we get an earnings report out. That stock is likely to continue to be very strong, although after a gap up, maybe we see a pullback. Let's keep moving on here. Back to the symbol summary, get after hours prices. CDLX, The report was kind of mixed, but this is one of our portfolio stocks. So for you Earnings Beats members, I just wanted to point this out. Stock is up a little bit after hours, had a little bit of a rough day today, but the portfolios overall did pretty well. Next up, DDOG. Talk about a strong stock. Man, this stock is up another 2% after hours, almost 3%. But look at this move to the upside. And want to talk about accumulation distribution? Check this out. When it was going down, it was at since going public, it was at a new high on its accumulation distribution. So the stock was being accumulated even though the fear was sending a lot of folks out of it at the open. But look at, there were buyers, and that's what the accumulation distribution tells us. Then we had this huge rally back to the upside. Gotta always pay attention right now, at least, to what's going on with that accumulation distribution, and make sure you've got a leader. When you got a stock breaking out to a new all-time high in this market environment, it's clearly a leader. DDOG, remember that one. All right, we're going to wrap this up now with the three you must see. First one I'm going to go over is Vertex Pharmaceuticals. I showed you I didn't. I'm going to show you in just a minute, biotechs. But here, I want you to take a look at Vertex. Make sure I got the latest. Yeah, okay, this is the breakout. We had a move up. Look at a little cup. See that cup? Handle, breakout, volume picking up. This measures up 275 to 245 to about 305. 30 points. Depth of the cup, 30 points. Breakout, you add 30 points to 275. That gives you 305. Vertex, I think, looks really good. Next up, RMD. Check this one out. Nice breakout here. Very, very strong accumulation distribution. This is one of those, see it going down, huge move to the downside. The AD line's moving higher, breaking out. That one didn't stay down either. Look at it, it's come rolling back. There was a lot of accumulation taking place. So while everyone was being panicked out of this stock, you had willing buyers just loving every share that they could get. And now you see what's happening. Stock breaking out, getting close to its back to all-time highs, or at least 52-week highs. So RMD, that's the power of that AD line, and it's the power of the strong AD chart list. All right, last one I have for you. I wanted to show you that biotech index. I have been preaching about biotechs now for quite some time, and we have made the breakout. Look at today's candle. Just another huge, massive day higher on the biotechs. Let me show you the strong AD, and let me show you the columns for sector and industry group. And then let's look at the best performers today. And I want you to look at the leaderboard. Biotech, medical supplies, biotech, pharmas, biotech, medical equipment, biotech, pharmas, biotech, software, pharmas, biotech, healthcare, pharmas. See a pattern there? Healthcare, look at all of them. Look at all this healthcare and technology. Well, one technology. Gotta focus where the strength is. I'm gonna send you back one more time over to earningsbeats.com because you gotta sign up. Trust me, it's free for 30 days. You'll get charged $7. You get your $7 back. Make sure you're also a member at StockCharts.com. But if you want to sign up for the paid membership, join me at the webinar Tuesday at 4:30. Go through this green button here, join today. Over at here, you can sign up for our free newsletter. We'd love to have you. Everybody have a great day. Good luck trading. Happy trading, everybody.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.